Hi, this is Zak Mir with the Bulletin Board Heroes here at Vox Markets for Thursday, the 27th of May. Starting off with Origo, where we've had a gap through resistance, something that one would have been looking for given the way that we've had higher support points at or above the 200-day moving average. That was down there at 202 pence, and the fact there have been multiple support points above that level over the last few months was an indication that momentum was building in a positive way. We've got that today. And at least while there's no break back below the previous resistance for the shares through the 255 pence level, we're looking for a target up at the top of that rising December 2019 trend channel as high as £3.50 as soon as the end of next month. We're really lucky we get away with a no end of day close back below today's initial low at £2.71 ahead of a move towards that particular technical target. Stock which I was toying with earlier in the week but didn't quite make the grade is Biome Technologies. Here we've had a nice strong green candle through the previous peak there. That was around the 405 pence level. While we're above that on an end of day close basis, looking for further significant gains. They could be towards the trend channel that I'm drawing at the moment, which is from back in November. For the channel roughly level with the 50-day moving average at £3.48, but above 405, looking for as high as £6.20 or 30 over the next 1 to 2 months. Only back below the 50-day line in the floor of the channel, really delaying the upside scenario. And the reason for the relative enthusiasm is that unfilled gap to the upside that the shares left back in March. That was the sort of the starting gun really for the ascent, and it completed an island reversal after the gap down that we had in September. So a pretty good technical and charting situation there for Biome. Another stock which is presumably in a similar area is coming up next, Bison. Here we've got a situation where we had the break of that symmetrical triangle there at the beginning of the month. Didn't look particularly amazing or impressive at the time, but the shares have actually built on that breakout, and one can say really while there's no end of day close back below the initial May support resistance rather at 3.2 pence, we're looking towards a retest of that spike from last month as high as 5.5 pence, and that could be seen as soon as the end of next month. The overall pattern here, one would be assuming it would be something like the line I'm drawing there, so a rising trend channel and filling out that the triangle there as well. So for the channel there at 2.75 pence. Bull argument in place while we're above 2 3/4. Best case scenario target at as high as 6 3/4, perhaps by the end of next month, but at least looking for that spike at 5.5 initially. Next up, a stock which is appears on a frequent basis here in the Bulletin Board Heroes, and it's back again. Brave Bison, a bit of a bear trap that we've had there intraday below the 200-day moving average at 1.26 pence. The good news today, I suppose, is the way that we've actually broken back above the top of the gap down. It's one of my preferred signals there. And while we hold above the top of that gap at 1.4 pence on an end-of-day close basis, we're looking towards 1.9 pence at the top of that broadening triangle. But the upside only valid while we hold above 1.4, so just watch out for that close today or tomorrow. At this stage, though, even if that we do fall back below 1.4, only back below the 200-day line at 1.26, which is not risking too much, would really turn this situation negative. Onto a stock which has got a strangely spelt name. Here we've got Sizzle. And not much of a chart here, but that doesn't stop charters looking at, or a technical trader looking at a situation. Here, the key point, I think, is the way that we had that support there at 6.5 pence. 2-3-day bear trap below it, and then we're back above it. So above 6.5 pence on an end-of-day close basis. If you're a fan of the shares, then you've got a chance of a partial or even a full retest of the initial resistance here at 13 pence, so maybe something to think about. Obviously, we don't want to see 5.5 pence broken anytime soon. On to Devco, which had quite a sort of hefty retracement from the best levels of the year, 39.5 pence. Just looks as though we've got a bear trap rebound effect here, so the low there in March, 23 pence, the low so far in May, 22.1 pence, and so that narrow bear trap could be the spur to an improvement in the stock. In terms of what we might expect, I suppose having broken a line of resistance there at 25 pence, we've got a sort of a falling wedge situation in place. That could lead the shares towards the sort of the 45 pence zone on the next push to the upside if we get it. If you're cautious on the shares, maybe wait for an end of day close back below that last resistance at 26 pence on the way down. But with the bear trap rebound, it looks as though the shares are on their way. And we've also got an MACD buy cross, and we've also got bullish divergence in the RSI window. So it looks like the momentum is back for the stock, as well as the point that we've had multiple support points above the 200-day moving average since the beginning of the year. On to one of the more hairy situations in the small cap space, Pathfinder Minerals. Looks like it's not quite so hairy now, though. That we broke that line of resistance from October at the beginning of the month, and I suppose that was versus the the point, we'll call it the 0.62 level. Above 0.62, looking for finally a move towards as high as that resistance line projection from June last year, pointing towards 1.3. Obviously, it seems rather ambitious, but given that we've been consolidating for so many months, and we've got a bit of a saucer-shaped reversal on the daily chart, with the handle just breaking out now, a decent end of day or a weekly close above 0.73, which was the initial May resistance, could get us on the way towards at least a penny, if not the 1.3 pence best case scenario. Stock which has been rather disappointing, despite having rather high profile friends backing it, is Simek Atlantis, but the gap higher earlier this week after a bear trap from below 6 3/4 pence does suggest that while we're above 6 3/4 pence, we could rally back towards the 12 to 15 pence area, which was resistance on the way down. If you're cautious on the shares, maybe you'd wait for a clearance of the 50-day moving average, 8.6 pence, before assuming 12 pence plus was on its way over the next month or so. And obviously we want to stay above 6.5 pence in the meantime. Just a couple of shares to go. Good announcement today from Tuple, and here we can see that shares were looking rather soggy ahead of the news, but another bear trap situation. So the low previous support there at 0.06 pence, and we had a low down to 5.5, let's call it. Nice gap higher today, and bear trap gap reversal, normally a decent signal. Should be enough to get the shares up to the 200-day line and last month's resistance around 0.08 or 0.09 by the end of next month. Finishing off with the star of the last week, and just a sort of lap of honour really for Wishbone Gold. We had the premium placing, and that was at 14 pence. I think they're accelerated warrants at 20 pence, but still got that rising trend channel from back in October, heading towards 25 pence, and that could be seen as soon as the end of next month. Ideally, the shares managed to hold above 17.5 pence on a weekly close basis. That was the old February high, and that would just sort of solidify the current positive technical picture. Once again, a stock which had multiple support points above the 200-day line ahead of the break higher, so that does give confidence that this particular rally will have legs. That's it for me today. More updates tomorrow.